All right. Today I want to look at weekly charts of all the indices. And last time we looked at the weekly charts, I told you that the IWM small caps were likely ready to run. And if you didn't see that episode and you want to see how I identified that the small caps were ready to run, simply look for this thumbnail or just look under my videos for the title ready to run, and you're going to see exactly how we knew the small caps were likely getting ready to go on a bull run. Now also, if you want to use these tools yourself, I do have a tutorial on how to set up your TrendSpider to look just like mine, and TrendSpider is currently running up to 50% off promotion this weekend, so if you're watching on Saturday or Sunday, you can take advantage of that discount by clicking on the link below and then claiming that discount for up to 50% off and a free 7-day trial. Alright, so now looking at the weekly chart of IWM, we could see we had a very bullish push, and the next likely location we're pushing to is going to be between 197 and about 200, which is going to test those previous highs, and remember the small caps are lagging behind. One of the reasons I had a speculation the small caps were ready to run is because they were likely lagging behind the S&P 500 and the NASDAQ 100 triple Qs, and typically once we start getting back into bull trends, all of the indices are eventually going to join that rally, and the small caps were simply just lagging. So if we put on the indicators that we use to identify that trend, I told you back at the time that when we touched the weekly 20 simple moving average with the weekly squeeze and the bullish momentum that we had in the MACD and the RSI above 50, that a lot of this bullish momentum was likely going to get released to the upside, and that is exactly what happened, and we used the technical indicators to tell us that we had a high probability chance of being correct. So this is a good risk reward trade because you had the risk level right here at the weekly 20 simple moving average, so you could easily define your risk, and all of the bullish technicals were telling us we had bullish momentum at that support, which gave us an increased probability to be correct. And then we paired it with the other indices that were also in a weekly squeeze that had the bull breakout, and that gave us more likelihood the small caps would join the rally as well. And now you can see we blasted right through that supply zone, which means we are now above what was critical resistance, and we're approaching the top of this range. So even though this rally is starting to break out, we could just be getting started if we can break through about 200, break out of this trading range the small caps have been stuck in, and then we can start running back higher towards the 50 and 60% retracements. So if we throw on some resistance levels, the resistance levels I'm paying attention to right now is going to be right here between 193 and 197. And if we break through that, we're likely running higher towards 203 all the way up into the 220s. Now that makes sense if you look at the technicals because the squeeze has not yet fired to the upside. The MACD is just now starting to cross over zero on the weekly chart, and the momentum in the RSI is starting to climb higher towards the upper momentum, which tells us this rally could just now be getting started, and the next catalyst is going to be the break above that resistance at 197 and 203. So if you pay attention to all of these technicals and you now see on the daily chart we're breaking above 188, you can now use another great risk reward setup simply by setting your risk at the breakout at 188 on the daily chart, knowing we still have a lot of bullish momentum pushing towards the upside, and that is likely going to propel the small caps to even higher prices. So as I've said before, when you have these technical tools, they give you an advantage because you can see a lot of things that are not visible to the naked eye. These indicators are telling you a lot more information if you pair it with the price action, but please do not forget that price action is king, and I always favor price action over any technical indicator. What we're doing here with the technical indicators is we're pairing them with the price action, and now we're stacking the odds even more in our favor by taking a technical tool and combining it with the price action. So when we have the price action and the technicals aligning, we know we have a very decent risk reward trade setup. So very quickly, if we jump over to the SPY weekly chart, we can see going back in time, SPY had a very similar event where we came down to the weekly 20 simple moving average. We had the weekly squeeze, we had the bullish weekly MACD and the bullish weekly RSI, and then from there we continued on to this bull run, and we've now hit the price target that I gave at 450. If you've been watching my weekly analysis, I told you SPY was likely going to 450, and now that is exactly where we just ended the week. So this is going to be a critical resistance, but that doesn't mean we can't break it and go even higher. So things to note on the weekly chart of SPY is that we are at critical resistance, and while we do have bullish momentum, we've already fired the weekly squeeze, and we're getting a little bit overbought on the weekly RSI. And overbought does not mean we can't go higher in a bull market. There is no such thing as overbought in a bull market, but it is something you want to be aware of if we start to get too far overextended. Overbought simply means we have a lot of bullish momentum, and that is why the RSI is called the relative strength index. When we have an overbought RSI, that is because the market is relatively strong. So do not confuse something being overbought in a bull market. You can only be overbought in a downtrend. There is no such thing as overbought in a bull trend. For example, you've seen the RSI barely cool down and then go right back up and then cool down and go right back up. And we can continue that trend in a very bullish market and stay overbought for a very long period of time while the market continues to climb higher. So do not short a bull trend simply because we have high RSI. Now, with that being said, watch the price action at 450, and if we get a high volume rejection, it is possible we come back down towards 430, and that's just a simple pullback, which means we could just put another higher low in before the next higher high. So watch these technicals because they have been very good at identifying these bull breakouts. And then if we look at the triple Q's weekly chart, we see the same exact story, and the triple Q's are now breaking resistance at 372, which means we can start pushing higher towards the 390s and low 400s. Also, if you pay attention to the tech sector of the S&P 500, which is the ETF XLK, that also broke out to a brand new all-time high, which means the triple Qs are likely going for all-time highs this year as well. Not a guarantee, but it's a very good correlation and something I wouldn't ignore. And we're seeing that breakout in the price action, and we still have the bullish technicals with all of the bullish momentum. And you can see how bullish this weekly squeeze has been, and we continue to push higher with no signs of loss of momentum just yet, but that could be right around the corner and we could be due for a correction. So keep in mind, even if we get a correction, a higher low into the next higher high is completely possible while we have this bull trend, which you can easily see by the rising weekly 20 simple moving average, which is going to continue to support price in this bull trend. And then quickly, we'll look at a weekly chart of the Dow Jones, which is in a very similar boat as the small caps. And you can see we're above the flat weekly 20 simple moving average. We have the weekly squeeze. The weekly MACD is above 0 and positive, and the weekly RSI is above 50. So we have the same exact recipe in the Dow Jones. And I'll go one step farther, and I'll even show you on the weekly chart of the Dow. This is starting to look like an inverse head and shoulders, which means if we get a breakout, we are looking for a full measured move higher, which could take us to the previous all-time high. You have bullish technical patterns, you have bullish price action starting to break out, you have all of the momentum favoring the buyers, and we're sitting right here above the volume shelf, which was a supply zone, which can now be a demand zone, which means the Dow Jones is looking very bullish above 340. Above 340 in the Dow, we likely push higher towards 370. And again, only the price action is going to confirm that breakout, which is going to be the break on the daily chart above 346. So pay attention to all of these indicators, and keep in mind, I have a tutorial in the description of this video on exactly how to set up your charts to look just like this. And you can now take advantage of a 7-day free trial and up to 50% off TrendSpider. So if you like what you see on these charts and you want to use these tools yourself, you can do that simply by clicking on the link below and claiming that discount. And then one more bonus that I also talked about in the TrendSpider tutorial is the short volume, and we did see an accelerated rate of short volume in the S&P 500 going into CPI data. And when the CPI data did not disappoint, all of those shorts had to get squeezed out of the market. And now you can see that the short volume is starting to decline, and a lot of those shorts are exiting, which usually after a short squeeze, it is possible to get a pullback, and that could be our higher low before we continue this bull trend. So there's so many tools you can use on TrendSpider to pair it with your price action to become an even better trader. Also, this is going to be the last chance to claim 50% off your first month of Bank Trade Alerts or the Stocks Channel Discord. Simply use the coupon code FREEDOM at checkout, and the details on how to claim that discount will also be in the description of this video as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.